All right, well, welcome everybody to the new client support afternoon time frame. Great to have everybody here. It looks like everybody remembered. So yes, thanks for joining us today and marking that on your calendar. And then going forward, we're going to meet every afternoon each week on Wednesday at this time. So keep that down on your calendar going forward. All right, so we're going to discuss any questions, of course, that you may have. So if you have any questions, go ahead and locate the questions window in our webinar software. We're going to be together for about a half an hour. These sessions are usually about 30 minutes. And we discuss basically anything that you all need to discuss. And if you're having a specific question regarding the software or maybe a course that you've taken, or a general trading question, feel free to ask it and use the questions window in the webinar software to do that, okay? Anything that we post for you will be in the chat window, which is also part of this software. So hope everybody's having a good August so far as the summer trucks right along here. Unbelievable how fast time goes, right? All right, well, let me go ahead and get started. I'm gonna go through some of our administrational items, including the risks involved in trading. You know, there are risks in trading the financial markets. I think we're pretty much aware of that at this point, but you need to realize there's different kinds of risk. There is what we call market risk, which is the overall risk anytime you have a position in the market or an investment for that matter. And then there's trade risk that really specifies the amount of risk you're going to lose on each individual trade. Now, when you use money you can afford to risk, called risk capital, you're really limiting market risk, and that's basically how you can control that kind of risk. And a market risk event is something that can come out of left field that causes the market to go or gap past your carefully chosen stop on your trade, and therefore getting it filled at a much worse level than you anticipated, therefore you have more loss. And it's very tough to guard yourself against that. They happen every once in a while, not often, but if you're trading with money you can't afford to risk, then you're going to feel it, okay? If it's money you can afford to risk, it's not going to be a life or death situation, so to speak. So do keep that in mind. Always trade with money you can afford to risk. The professionals in this business do that. They don't trade their entire net worth for that reason. Now, when it comes down to protecting yourself on each individual trade, that's called trade risk. And trade risk is something we control by calculating how many shares of a stock to buy, or how many contracts of a futures to buy, or whatever you're trading. So it's the size of what you're actually committing in a trade. That's your trade risk. And a lot of variables come into play when determining how big the bet should be, big the trade should be. And a lot of that has to be where you're going to enter, how far away your stop is, and the most you want to lose in a percentage amount if the trade goes south. And therefore, the actual number of the bet size will vary depending on how far away the stop is, and of course, the percent risk you're willing to lose on that individual trade. Now, I can tell you, if you do that on every trade, then, and you have an edge, okay, then you're going to be fine. All right. However, all right, occasionally a market risk event comes along, but if you're doing your trade size on every trade, the impact of a market risk event is going to be far less than if you had not actually calculated the correct position size. So always do that, and most of the time you won't have any problem because market risk events don't occur often enough to be a big deal in terms of those that calculate their trade size. Now, the other thing too is always check with your financial advisor, accountant, or whoever manages your money, because I'm going to be talking about some ideas here that you may want to act on. We may even look at a stock or whatever, but the idea is I don't want you to act on that information based on purely what I'm saying, because I don't know your personal situation. So definitely always check with them. Now, one more thing regarding trade risk and market risk is that if you're going to be a high frequency trader. In other words, day trade the markets, the futures markets. I highly recommend using a prop firm for that, because that way you are trading not your own money, and you're trading the prop firm's account, and you have to pass an evaluation account to make sure you're using risk control, make sure you have an edge, and so forth. So it's a great way to tiptoe into day trading without risking your own money. And you know, trading's a process. You got to learn how to do it. And every time you change time frames like that, it's going to change the way in which you need to enter and exit the market, and you're going to have to be faster. And therefore, you need to get those skills honed down, and it takes time. So you got to be patient with yourself for that as well. Okay, so please remember that. I think that's really important. If you're interested in the prop firm thing, here, I'll put this up here. I'll put a link up here in the chat area. We have a special link where you can save a ton of money on a prop firm subscription fee. And basically what that entitles you to is you get an evaluation account, and you can buy, there's different account sizes. You can start at 25,000 and go up way over 300,000. And the subscription fees are based on which particular account size you use. But if you use our link up there, you will save a ton of money on that. So definitely check that out. And again, I think it's a great way, if you're interested in day trading, to get involved and do it safely with their money, so to speak. The other thing too is that they give you data. So not only do you have your basically your account set up, but you also get data. So it's a really good way of going about it, and I use it and enjoy it. All right, now a couple books here. All right, so I've got books on money management. So if you need help in that area, there you go. My new book, The Art of Trading, which is now completed and will be out this year. Very excited about that. That's going to be a little over 500 pages, so a pretty intense book. And that's being published by Wiley. I've got Elliott Wave Techniques Simplified, published by McGraw-Hill. And so those are all available. And of course, you can go to our website and check those out. Also, too, we have software, and many of you have our software. That's why you're here. And of course, we have charting software, scanners, and risk control software as well. All right, one quick thing to talk a little bit about here. How many people here actually are using our software? And let me know what platform. All right, Faye, how are you? Good. Glad this time is better for you. Good to have you here. Yeah, a lot of people like the afternoon time because during the day they're trading or they're busy doing something. So the later afternoon is kind of a lot more relaxed and better. So I'm glad. Yeah, good. All right, so let me know what platform you guys are using. All right, Ninja Trader. I'm seeing Ninja Trader out there. TradeStation, excellent. Okay, what else do we got? eSignal, a couple eSignalers here, good. Good. Any problems with any of the software on the platforms? To our knowledge, everything is working great. I use Ninja Trader every day and TradeStation. So, basically I'm not having any problems with those. But if you're having any trouble, let me know. Our software works on eSignal, multi-charts, which a lot of people overseas use because it connects to a lot of overseas data providers. We use MT4 for our forex people, and also MT5, which is a forex combination stock platform as well. Okay, good. So it looks like everybody's pretty good there, and you guys know how to download the software. And if we have any updates, make sure you belong to the forum in the VIP area. How many people know about our forum? Be sure you definitely check that out, okay? All right, cool. Now we do, when a new version of something comes up, we test it. All right, if you have any questions, you can always email us before upgrading, but most of the upgrades are not a problem. Unless it's a major upgrade, then we may have to tweak a few things, but we'll let you know in the forum. So that's really important, okay? Okay, yep, Frank, that's the only thing I'm showing right now. All right, this is the system for you, Frank. You should definitely look into this. All right, so how many people out there currently are trading using the prop firms out there? We got a good turnout here. I'd be interested in seeing how many people are using prop firms. They certainly seem to be very popular these days, and with good sense. Anybody have any? Have they been able to get funded? You know, in a prop firm, you have to go through the evaluation period and then get funded. I'm going to be holding a tutorial here in the Tucson area, probably sometime in November. We're working out dates right now, and we're going to be talking about a lot of how to get funded with your prop firm and some things I can help you with in order to do that. Some of the short-term trading, we use different types of strategies with, okay? All right, let's see what we got. Yes, I'll be doing in YouTube in about, what is it, 4:30 today, Pacific time. I will be doing the market review. So I'll be going over the markets and the current move down we're having with them so far. You know, we've hit our target area for a wave 5, but we may not be quite done. So we're going to take a look at that and analyze that. So definitely come for that. Gene, if you have a link that you could put up in the chat area for people to attend, that would be great. It is free, by the way. All right, let's see. What else we got cooking here? All right, good. So yeah, a lot of NinjaTrader uses and a lot of TradeStation. That's kind of typical. Two very popular platforms there. Now, if you're using TD Ameritrade or Thinkorswim, how many out there are you still having any issues with getting that data once they merge with Schwab into NinjaTrader? Let me know if you are, okay? Because I think what they're doing is they're doing kind of a rollout or rollover on that. Okay. All right, next question is, all right, how do I set up my charting platform on NinjaTrader like you have it? Well, let me make sure. Like this, you mean? Is that okay? All right. Okay, so basically what I do is, in order to get your platform the way you like it, all right, you may have to do some tweaks to it, and you also may have to create a workspace and so forth. So one of the things that I do first is I go up to the workspaces up here, okay? And I have two different kinds of workspaces, one for position trading and another one for scalping, all right, the markets. And I keep it very simple. So my position trading charts kind of look like this for the most part, all right? And I have 3 charts on here, and the chart on the left is the lower time frame. The chart in the center is the primary time frame, and the chart on the right is the higher time frame, okay? All right, so that's kind of how I set it up. And basically, if you start out and you have the generic NinjaTrader or even TradeStation setup, sometimes they put a lot of what I call bloatware on there. They'll have stuff I don't need, okay? I just delete it and then save the workspace in the desktop the way I want it. And that way, when it opens up again, I don't get all that bloatware. So if that's bothering you, you can definitely set it up like that as well. I'll leave that up to you guys on how you want it to look. But I will run by, since the question's coming up, I will run by, basically what you want to do is you go to the control panel. And the control panel is this thing right here, okay? I've got it scrunched up, but you can widen it down, you can make it bigger, you can stretch these windows just like you would any window within Windows, right? So it works the same way. So that's pretty generic. Now, what I do here is you go to New, all right, and you pull out a chart to start. And the chart, if you have it all set up, we'll have our software load, because Mark, our installer, when you buy our software, sets it up so the default loads the chart, each chart with our software. And then you want to do, actually after you get one all loaded and set up, that will be one out of the 3 charts if you want your charts to look like mine. So then you go to the chart itself, and on the left-hand side in red, there's a little symbol, obviously called chart. And if you click on that, right click, you can duplicate it. So if I click here, it will open up the exact same chart in a brand new window. And this is a great way, once you get your chart set up, to duplicate the chart another 2 times, and you'll have 3 charts that you can reposition on the chart like mine. All right, so that's the easiest way of doing it. Now, another thing that Mark does is he also creates a template. So if you go to templates and load, all right, he will have it set up as a default. So you really don't need to do that. That should be all done, okay? If anybody needs help on knowing how to do that, let me know. But that should be pretty much all done for you. So then you just position them. And I like to make the one in the middle a little bigger than the other ones. And so I position that one in the middle bigger. And then for this position trading type of trading I like to do, I have the 60-minute on the left, the daily in the center, and the weekly on the right. Now, if you're going to use a chart that is under the daily time frame, so a short-term chart like our 60-minute chart, you're going to need to have intraday data. All right, I like to use it. I like to have an idea of short-term what it's looking like. Some people, if you don't want to use the 60-minute chart, you can use the daily and the weekly and focus on those 2 charts, and then use the free end-of-day data that comes with, okay, here it is up here, comes with the actual platform, which is right here, okay? Or you can pay like I do for the kinetic data for stocks and everything, and that will bring it up over there. Okay, so there's different data for different needs. So you got to make sure you're getting the right kind of data. If you're a futures trader and you only dabble in stocks end of day, then you could probably get along with having just the kinetic end of day, and then use that prop firm I was talking about, Apex, to get your free data for futures. So that's a great way of doing that, and it won't cost you an arm and leg, because some of this intraday data can be expensive. All right, so keep that in mind. All right, so now, once you have this set up the way you want, all right, what I would do is, if you have a big scanner up, if you have the scanner, you can set that up here. But basically, for most that don't have scanners, you'll just have the actual control panel. So you want to put that up at top, nice and neat, so you can reach it when you need it. And then once you have everything set up the way you want it, go to Workspace and click on Save, okay? Now, if you want to create something new, then you can save as and create a brand new workspace with the current setup. And that's really all there is to it. In TradeStation, you would just go to Workspaces, all right, click on Save, and then save the desktop too. So there's actually 2 types of savings. You can save buttons you need to do there. One for the workspace, one for the desktop. Now in TradeStation, if you have simply a desktop that you like up there, you want to add another one, another workspace to it, you can just click the little plus sign on the tab and start loading it up the way you want. But the idea is you want to be able to toggle quickly back and forth to a setup that you want to use for the type of trading you want to use. So hopefully was that helpful? Okay. Hopefully that helped you in your question there. And if you have any further questions on that, feel free to ask, okay? All right, one of the things I wanted to talk a little bit about, we get asked a lot, what is the difference? I want to ask this for everybody here. What's the difference between investing and trading? How about that? Let's start out there. What's the difference between investing and trading? Investing and trading. I'll give you, okay, so, all right. I see some answers coming in. Let me give them another minute, okay? What's the difference between investing and trading? Okay, somebody says I don't use stops for investing. Okay, all right. But what's the real difference? From a technical standpoint, when you are investing in the market, you're usually controlling risk in a number of different ways and a little bit differently at times than the way we do it when we position trade, okay? And basically, yeah, we're talking the difference between short-term versus long-term. And there's a whole different styles in between. So you can have very short-term trading, you have swing trading, also called position trading, and then the time frame you choose can also alter how you want to trade that particular market. You know, you can also day trade using swing patterns during the day, or you can scalp using other methods like volume profiles and things like that. So there's many, many different ways in which you can approach the different time frames to actually trade. But in terms of investing, I think one of the things that investors count on is diversification. So unlike a trader like us, when we pick out a trade, we're usually looking at a trade, getting an idea of where the target is based on a variety of different sources. We may use Elliott wave, we may use fibs, but usually we're focusing on one market and basically placing our trade on that swing trade. Now you may swing trade several markets, that's fine. But when we talk about investing, what they usually do is they take an investor's money and they buy different stocks or different mutual funds with that money in order to provide diversification. And through diversification, they figure that they can basically, if one stock goes south, it won't affect the overall portfolio that much, okay, as the other stocks should remain strong. Now, of course, if all the stocks go south, then you got a problem. But that's the purpose of diversification. If one sector is not doing good, the chances are the other sector is. And it's called the Ibbotson model, and it's used at all the major brokerages in the country. So when you walk in and say, you know, I have some money I want to invest, then of course they set you up with that type of model. The other thing with investing is that if you believe in historical norms, if you leave your money in the market for a certain time period, that generally, if you have a well-diversified portfolio, that portfolio, if the money is left in there from 7 to 10 years, should start to earn a positive return, even if you have short-term sell-offs that could even last a year. So time is your friend when you're an investor. So when you put money in the market and you're investing, you want to be able to, and most of your financial advisors will tell you, you need to keep that money in there for 7 years and don't freak out if the market sells off, okay? All right, so that's their model. And so what they're doing is trying to position your money so at a certain period in the future, more than 7 to 10 years, you can get a historical rate of return of what you should get on that money. And for people that are not savvy about the markets and don't want to take the time to do all this trading stuff that we do and have a full-time job, can't manage it, that's probably the best way to go, especially if you're young and you have money to put away and you don't need it for 10 years or so, or even when you get close to retirement, okay? So that's kind of the deal. And also they do dollar cost averaging in and all that kind of good stuff. Okay, trading's a different animal, all right? Trading, swing trading, position trading is kind of a zero-sum game because there's winners and losers, and it's basically based off our analysis using technical analysis in the markets. The shorter the time frame, the more of a zero-sum game it becomes. And when you are day trading some of the very short time frames every day, It's basically like a sport. I mean, you're going back and forth, entering and exiting. You're battling the professionals in the market, market makers, if you want to say, that know how to run stops and turn things around. It is a very short-term zero-sum game. The longer the time frame, the less of the intensity. And so swing trading for most makes a lot of sense because it's fun, all right? It's intense enough, but you don't have to have daily involvement like you do even a shorter time frame. All right, so position trading is very popular, especially also if you have a job, because you can look at it at night on the daily chart and make your analysis and decisions. Now, another question I'm asked on in swing trading and position trading is, do you ever use fundamentals? And the answer to that is you certainly can, okay? If you have fundamentals that are favorable on a company and you're using analysis like our software, and it is also generating a signal, then that certainly is a very positive trade, okay? That's a high probability trade because you got the fundamentals going with the actual signal generated by technical analysis. So you've got two going together. A lot of times, if you look at a news event or something of that nature, there may be something in the news about oil or gold, and you want to take a look and see if that news is producing some activity that you could take advantage of. And again, that's when we look at the technicals to see if they are generating any trades. So sometimes the news can lead us to a specific market to trade. All right, so that's kind of something you can certainly think about. The bottom line, I think, with swing trading is the trend is your friend. All right, sometimes it doesn't really matter why it's trending as long as you're in the trend going in the right direction. All right, so that's a really important aspect. The trend is always your friend, and some of the best traders out there really sometimes don't care necessarily why it's trending, but their system generated a trade, a breakout trade from like a consolidation area, and see the trend emerging so they don't want to miss it and jump in on it. And then their stops, of course, are placed at areas where when the trend ends or if the trend fails, they get out and they know what their loss is because of risk control. All right, so all that is how a trader protects themselves, whereas an investor will use diversification among different asset classes in order to protect themselves. So two different aspects, okay, of it. But you know, you can use fundamentals with trading. There's some very big hedge funds that do that. Okay, so there's nothing wrong with doing that. Whatever you choose, just become an expert at it. That's the key. Any questions on that? Anybody at a hedge fund that wants to chime in on that, feel free to. I worked at some big institutions in my younger days, and I can tell you they have technical departments that trade these things. And I got to be honest with you, in the big institutions, they have departments where they do nothing but day trade. They do nothing but swing trade. They do different time frames. You have traders that are trading monthly charts. You have traders actually trading weekly charts. You have them combining weekly with daily like we do. And then they have the intense area of the day trading markets. Okay, so they do it all. All right, and you can too. You just got to pick a time frame and then become really focused on it and work at it. Trading something that takes time to develop, and you have to, first have an edge. That's the key thing. It's kind of like a good analogy is some people will ask me, Ben, do I need 12 monitors? And my response to that is, can you make money on one monitor? And if the answer is no, then you don't need 12. Okay, so it all starts with the basics. Have an edge, work on yourself, work on your psychology, work on your risk control, and work on your method. And when you have an edge, then you're ready, okay, that type of thing. And the great thing is there's many different ways you can practice while becoming proficient in this. And that's really basically What you need to focus on is the process, not so much the money, okay? Everybody kind of tends to focus on just the money. The money will come once you have an edge and you have the process. And you will fail at times, but that's part of the process as you learn from that failure and move on, okay? So I think that's kind of important. All right, well, I kind of just wanted to basically talk a little bit about that since it was a question that came up. We're already at the end of the half an hour, so time kind of flew here. Is there anything else that anybody have me talk about before we end here? And we will be meeting now every Wednesday at the same time. And I kind of like it better too. I kind of think it's a lot more relaxed. And if you have any questions, you know, this is your webinar, so feel free to come and ask that when you're here.
And Ben, don't forget, market review.
Okay, yeah, market reviews coming up. I think I did mention that earlier, but I'll mention it again. Market review is coming up in, what, half an hour, Jeannie, I think? 4 o'clock or 4:30?
4:30, so about an hour, everyone can get a cup of coffee.
I'm getting used to the times, new times. So that's 4:30 today, and that's going to be another half an hour. And we're going to be doing that on YouTube. And I think Jean put the link in there in the chat area. And so if you click on that, that will take you to our YouTube page, and then we come on at 4:30. And it's free, and you can certainly chat and with us and at the same time. But basically what I'm going to go over is the markets, what I think is going on, and also I touched base on Bitcoin and the real estate market too. So I try to cover those 3 main areas that people are interested in. All right, so I don't see any more questions coming in, so I think we'll call it a day here. Thank you so much. If you have anything that comes up, write it down, bring it back next week. If it's something urgent, feel free to submit a ticket and we'll get right on it. And other than that, we'll see you next week. Have a good one. Thanks so much for coming. And this was recorded, by the way. So if you ever miss a live session, you can go to the recording, but you have to access that through the VIP area because it's in a private area. All right, see you next week. Thanks, everybody.